Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Our guest today really needs no introduction. It is Mr. Francis Hunt, the market sniper, the crypto sniper, and the reset sniper. Thank you very much for coming back on, Francis.
I love it as you're winding up. The market sniper, the crypto sniper, the reset sniper. I feel like one of those boxing champions where he goes, and he's the current WBF head. He is the WBA. Glad to be back anyway, despite some fanfare.
Yeah, fantastic. There's been a lot going on. It's been a really busy week for data. And right now, not just the crypto market, the equity market, even the commodity market is really swept up in this kind of whirlwind of lots of things going on. And really, we're trying to look for a sense of direction here, or really trying to make some sort of sense of everything going on. So hopefully you can share some of your views with us today.
Well, firstly, I want to wish you and all your many viewers happy non-recession day, because the US GDP number came in at minus 0.9, which is the second quarter negative after quarter one. And we've recently been informed that that definition no longer officially really holds as two negative quarters being a recession, cause holistically, the pizza boy delivery market is absolutely red hot. And there's lots of lots of vacancies at that end of the market. So there you have it. You have the rules being written. This to me is almost Animal Farms, and I'm jumping in here, and I know you got a question for me, but I just want to highlight this point. This is almost Animal Farm territory where the pigs start changing the 10 commandment rules on the wall, and they draw a line through it and go, some animals are more equal than others. For those of you fans of George Orwell, and I'd certainly suggest, I actually think Animal Farm was one of the best out of it. I know 1984 takes all the plaudits and is deeply dystopian and seems a little bit less like a fiction book rather than an instruction manual, but you should certainly read Animal Farm if you haven't. We got put through it on school, and we've just reached that point where, definitions and rules are just recategorized as something else. And no, that some people say. No, economics specifically has dictated that is always the case, but now apparently no, it's a fringe element of economists that assert these things, and there's a new holistic measure that is fuzzy and allows much more weasel room.
Absolutely. Yeah, no, Animal Farm is a great book. It's not a huge read for anybody that wants to read it. It's actually quite a compact book, but a brilliant one. And this is it. The rules are getting changed. They're moving the goalposts at every point. Realistically, right now we are in a recession, or at least I'm going to say that is typically, we've had the first quarter which was negative. This one came out negative today.
Oh, absolutely.
What does this mean for everything? What does this mean for the stock market? What does this mean for the cryptocurrency market, which are both very tethered together? What does this mean?
Yeah, I'm going to rock back into this heavenly divine light and go, all hear ye, all hear you. But I'm going to refer back to the hyper stagflation statement that I made, where you have these two simultaneously extremely powerful forces. And one is of the inflation, which is this runaway spiral of cost, the commodity cycle, what you've seen in oil up until now. And at the same time, the death knell to growth, which is this hyper strong force that actually says the economy is not in great shape. And you are absolutely in a technical recession, and that is a definition according to me, and the rules haven't changed, and you are recessionary in an environment where the Fed still intends to continue tightening. Let's also clarify how late they were in recognizing inflation when we said it was inflationary. You had asset price inflation. That's where it shows up first. Then you had all the other varieties. Eventually you end up in commodities, and commodities are known to be those things that are mass produced, and also in terms of wheats, grains, and everything, scale benefited. So you benefited from technology, and you benefited from ever greater scale and globalization. So those things always were the last things that ever moved. Often you could have inflation in many of those things, but because of the technological benefits, combine harvesters, bigger farms, eventually you have 40,000, 100,000 hectare farms run on by 5 people, where before it was much more subsistence farming. So commoditization is really things that shouldn't cost a lot because they scale down. And we now reached a point where even the commodities are running, and have run. So that's the inflation, and that's caused by the central bank cartel and their printing. They will, of course, reframe this as you, the consumer, have been irresponsible. You've done too much flying, expressed too much freedom of movement by driving your car, bought too many gadgets that they're forever marketing. Don't forget George Bush saying rush out and consume and spend during the downturn of the GFC. So when it suits them, they're all happy to be commercial, punters, push, go support, go buy America, but now, of course, in the light of the inflation, on one hand, you're over consuming. So you're actually damned if you do and you're damned if you don't, because you've got the huge recessional force and you are here, you're in recession, but you've also got the huge inflationary force. So there you sit in the middle where you're actually suffering under both. So your costs continue to go up, but the economic growth is being brought down. And this is what happens with the financialization of everything, debt, which is being artificially sustained at an artificially high level. Because as we mentioned on the commoditization and wheat, when you have mega tons of wheat, it doesn't sell for a great deal per kilo to mills. But we have mega tons of debt. And amazingly, this debt, especially in Japan, where they have yield choke, only pays 0.25 interest. And the yen has lost an unbelievable amount of value on top of it, but it should be maintained there. So this is the perverse nature, and this is what you get. I saw actually on a clip, that was Milton Friedman, and he was referring to doing the responsible thing. It's very similar to alcoholism. People want to drink, and they get the highs first, and then you get the hangover afterwards. And if you get the habitual drinking, you become a drunk, and you have to detox. So politicians will always produce the quick highs when it's on their watch, on the basis of after me the storm. They probably won't be here. They get by. Next person can pick up the garbage that actually comes from cleaning up the party that you had. And in the same way, doing the right thing actually is to take pain first. The last time we had a Fed chair that did that was Volcker in the run-ups post the 70s, that Nixon started the 70s with the gold in 1971 being delinked from and going full fiat system. And then we went into full inflationary with a bit of military industrial complex with the back end of the 60s running into the 70s in Vietnam, dropping more bombs on the jungle. I mean, who can think of anything more productive than blanket bombing jungles and then dropping some Agent Orange so you can totally torment the indigenous population with generations worth of retardation. Thank God we paid for that. That's all we can wonder. And what did you get? You got your inflation for the productive use of that military industrial complex. And this is where you now sit. You sit in the inverse Goldilocks. And when we spoke about Goldilocks, it was the Greenspan who was giving us all drinks and not taking away the punch bowl. So you got the globalization effect that allowed us to run a lot hotter on asset price inflation, .com boom, equity boom, bond boom, everything by the damn dip boom. Yet your input, your everyday items didn't go up too much because you had little kids in India sewing your footballs and football boots. You had China on much lower income doing slave labor and working 14-hour days making your garments. And you had your Italian designer doing the designs that were sent out there, and they knocking them out on mass load. So we didn't experience that. We took the drink, we snorted the coke, we had the party, we danced with the strippers, and then the next day we woke up with a hangover and the cops knocking on the door and puke and mess everywhere. And we're now in that state, analogy wise, that you actually are getting kicked by both bearish forces. And this is hyper stagflation. We coined this phrase, and there's a reason for it. It's a normal stagflation. This is, people go, oh, well, it's like the 70s. Everybody does association. There are elements that are like the 70s. The only difference is in the 70s, you never had the debt levels that you have today.
It's much bigger today than it was back then.
Much bigger.
You can't compare. There's obviously similarities between the kind of conditions that we're under, but in terms of the scale, and this is the thing with the crashes that we have, they get larger and larger and suck more and more people in. And this is the real concerning thing.
Central banking cartels introduce volatility. I just recently appeared on another podcast and I said, they are, because this is a crypto channel, so we draw a crypto analogy for you. They are the original shitcoin pump and dumpers. that every person in crypto that is a scammer is now doing. In other words, they run it, they just do it on a scale so vast and so huge because they control liquidity, that they run asset price booms and crashes, booms and crashes. And in most instances, all the citizens of the world are like retail traders. They get caught in the pump near the top, and they're the bag holders for the dump. And this is in essence where we are. And slowly the assets, the chips on the table's being lifted like this, are slipping all to the banker and the house's side. And everyone else is being stripped, and you will own nothing, yet you'll be happy because you'll be plugged full of big pharma.
Absolutely. Yeah, no, absolutely. And certainly in regards to houses, I mean, if you look at just how many houses BlackRock scoop up all the time, consistently, and all these other big players, you know, it's a scary future, but it's one that I think anybody with an open mind can sort of come to terms with, that we're moving towards. And really, you know, when you speak about the assets getting tipped, what exactly are you referring to there? Are you referring to the fact that essentially you might see people having to give up their assets because we are in a recession? We're seeing some serious issues within the housing market, not just in the UK, but globally. Are you referring to the fact that people may not be able to hold on to these assets anymore and really have to give them up to the banking cartel, to the kind of institutional arm?
This best summarizes my take on answering exactly that question. In other words, do we have more vicious downside to come? And I'm going to share something that shows the unemployment rate. So permission me there, if you will. The white one, and there's a yellow one. The white one is the New York Stock Exchange Composite Index. So it's not quite the Dow. The Dow's 30 equities. This is everything. And so you're starting bottom left on the white, and you've gone kind of to the top right. And then the other line that I just want you to focus on, and then I'll explain my annotations in a second because it's kind of busy and I need to introduce this layer by layer. The other line, the yellow line, is the unemployment rate. So unemployment, that's pretty hard stats. If people are claiming unemployment, it means they don't have a job generally. So what you'll notice is, if I draw with you here, and I'll choose the TG pink and I'll go fat Koki, the low of the unemployment rate roughly over here. There we go. You see me doubling up on it over there. The low on the unemployment rate was pretty much where this green arrow, the high on the equity market, the white line. When the unemployment rate shot up to there and reached a peak and then sort of based for a while and only began to come down from around this point, you are at the lows of the equity market down here where the pink arrow is. So the pink arrows are all the lows of the equity market. So once you had your spike high, but you stayed stubbornly high, and then you properly, the last point before you started to come concertedly down, you came in, that was your bottom of your equity low. So again, if we go again, when was the point that the unemployment rate, that was the absolute low, but this was the final low period before it began a run up. When that happened, the final low period before it began a run up, that was your high of the stock market, 2007. You see it there on the green arrow. Roughly the last low levels before it's had a major move up. When you hit the high, on the blues, the blue marks are all the highs of the unemployment. You're essentially at the low point of the stock market. It's not a surprise that these things are correlated, but the highest points of unemployment are going to be correlated to the lows of the stock market, and the lowest points of unemployment are often going to be correlated to the highest points of the stock market. So from there, we had this huge 2009, and we went into a mega reflationary environment. This was QE 1, 2, 3, super low interest rates. Unemployment went to an exceptionally low. Bear in mind, participation rate is ridiculously poor now at the moment. But inside of that which they count within unemployment, we went on the basis that you're comparing like for like to an all-time low in unemployment. You'd never had it so good. I would argue a lot of those jobs, as I say, will be the menial zero contract stuff. But nonetheless, everyone had worked 2019. The final low before you started to go up again was actually here. That was the absolute low. But the final low before you started to go up again was here. And you went up in a straight line on account of it being the events of the pandemic. That was your final high as well. End of 2019. By the time the 2020 first quarter started, we were full lockdown and the whole story. Major crash, that's your low of the stock market. That would have occurred at the peak. Now, this yellow line's actually gone off the roof here, just to put some context in here. So again, their actions and their counter actions, if I just clip the highs, this is somewhere off there, and then the lows, you can see this is actually what we call a broadening structure. Their actions and subsequent reactions to events they created are creating ever greater volatility. They are not a stabilizing force. They are a volatility enhancing force, which each shake and pump and dump scalps the retail punter and stacks the chips into the house. So when you understand this, you get a feeling. Now, to take it forward to where we are now, because everybody goes, yeah, nice retro look back at 2007, etc. What does it mean for us today? So what does it mean for us today? Well, where are we today? You've just had another all-time low, 2022, in the unemployment rate, and you've started up. You're beginning that journey up, but you are still very low. This entire range for the unemployment, you actually weren't that low in the 2000s. 2006 was your lowest. It was up top here. And you weren't that low even in the year 2000. So 2002, you've never been that good, let's call it, in terms of unemployment, but you've never spiked so goddamn high in the unemployed. Now, my argument is the next events that will befall us will have to match or surpass the events of COVID. They may not be single line item spike, but they will go through a series of events that will probably result in most people being rendered care of government.
Yep.
And that is how you introduce UBI. You have the masses without work and money. If you have the masses without work and money, they'll sign up for anything. And that's what they need, because that's where they're taking you. So if you understand resetonomics, another one of my coined phrases, and World Economic Forum's agenda, an ultimate Bolshevism is you have to rely on government for almost everything. That is communism. They are the arbiters of last resort that entrenches their ultimate power, and it is the ultimate communism. And it'll be a technologically driven, surveillance, finance-based communism, and that's where we are. Now, the top of the market, in my opinion, correlated with this extreme low that even surpassed the absolute low of 2019 and just before the COVID. So for those that say, you know, like our friend Hunter, that we're going to go up to a new high, well, then I'm going to say, well, okay, you've got to push unemployment then right off the bottom of this scale. There's literally got to be no one unemployed at all. You're going to have to somehow surpass these levels for that to happen. Far more likely to me is that this yellow line has had an extreme reaction back down and is now, as a result of actions of tightening. Remember, there's lags. So the Fed policy was super late on interest rates. I said long ago, there should be tightening, it's inflation. Should be tightening, it's inflation. Then they start no inflation, little bit of inflation, transitory inflation. Oh shit, there's a whole bunch of inflation. We're all lying to keep it under 10% in our stats, but it's probably twice that. So that's how we went. So they're like a locomotive, and I mentioned this with a bungee cord between each carriage. So when they start chugging on the tightening, you've got to remember that the next carriage doesn't even start moving. All that happens is tension gets taken up in the bungee cord. It takes a while for the effects to build. The transmission system is slow. So they start tightening. The banks will then up rates. Only people who are changing homes at that moment are immediately affected. But as more and more people over time are buying, renting, having to get in, they start to come into these effects. So the next carriage starts to move, and there's a bungee cord between all of them. Then when you stop, the locomotive stops, but you still have all that inherent momentum that has been built up that is bearish, that all comes and kicks you in the arse as each one of those carriages absorb all the tension in the bungee and they start accelerating and they hit the back of the locomotive. So this is your leads and lags as a kind of explanation, an analogy of the system. So in our view, we were too late and too slow, and now we should already be in a normal environment cutting. But we're still talking about a future next meeting cut and backing off in September. and you're deep in a recession, and again, it comes back to that overlap, you're in the twin evils of negative growth and high inflation, which is the absolute detox of the Goldilocks economy that the multi-era Greenspan bequested us. So you had your party, you had your time to make tons of money on the property boom, the dot-com boom, the crypto boom, and all of the others. Now you wear the detox that goes with that, and that which you haven't stored and kept well, you're in deep, deep trouble for. Interestingly enough, gold bounced on the 1680, classic key level of significance.
Yep, I saw that.
Level today. Yeah, I don't know if you picked it up, but that diagram, I'll stop sharing now, but I don't know if you've got any comments.
This is fascinating. Just quickly whilst you're on it. So there's a correlation here. So when you have peak low unemployment, that typically is linked to the highs of the market and vice versa.
As the low employment is actually reversing back up.
Yeah.
Because you can be peak low for a while. So for example, over here, you had a sustained, far more stable period. That was probably peak low, but you went a little bit up and then you stayed in a channel here, and then you broke out of that channel. That's where you typically at peak market highs. So the reversal, not necessarily the absolute low, but it's close to the absolute low. But we're not trending in a box here. We're snapping back up. You know, if I just, whoops, I didn't mean to do that. If I just highlight that.
Spoke about with, you know, people calling for that next rally, you know, this is going to turn around and go up. Well, what they're relying on, according to this, is that unemployment is going to continue to roll over. Well, why on earth would that happen in this kind of an environment? Not only that, one thing I've been talking about quite a lot is, have you seen how many layoffs are taking place?
Yeah.
And
unemployment is going to rocket.
Yeah.
Because the corporations can't make money. Their input costs have gone up and people have less money to spend and can't afford it. So they can't pass pricing on. If you're anywhere in the middle of the chain, you're not a farmer and you're not an originator of a commodity or an oil producer. You're anywhere else in the middle of the chain. All your inputs have gone up immensely. Europe had, in one set of PPI, which is producer price inflation, that's the inputs. So if you're in the middle of the chain, how much your costs went up for goods that you're making? 37%. Now imagine what that does to your margins.
Imagine what that does to your consumer. And this is the other thing as well. This is brilliant. I've actually not looked at this before, but this is absolutely fascinating. It's something to pay attention to for people that are trying to call bottoms. Instead of just hoping for one, look at some of this data, because you're going to get far more from this than you are just hoping and praying that things are going to turn around here. And this is one aspect of why there's this cautious element to being an investor right now. You've also got to talk about the huge amounts of liquidity that are off the table. If markets are driven by liquidity, where's that liquidity coming from? Markets don't typically bottom when you're continuing to hike. You know, it's a really interesting time to be alive. It's fascinating, if nothing else, but this is absolutely fascinating. So thank you very much for showing us this.
Yeah. Well, to me, this is such a gimme of a chart. I don't know why more people aren't talking about it. I've almost analyzed it and put too much on it that it's almost confusing. But you've got to understand, I started with a blank and then I added the layers on it. So that's why I've taken the time to explain it. But it's quite clear when unemployment has based and is just before to start its decay and move up, which we've had an absolute spike down. You get bottoms that are low volatility, rounded bottoms. And that's what I would argue was the case. I'll go with blue here. You had kind of chilled period coming in, trending down. There was much less inherent extreme volatility in that. And you can argue even here, as you were basing, you could see that some sort of bottom, a final capitulation, and then you boxed out here. What these events that they have introduced have done is they've absolutely ramped things and then reacted so strongly that they've absolutely dumped them. So this truly is me taking you for a spin in my Porsche Turbo S, and we go, 0 to 100 in 2.6 seconds, and then I jump on the emergency stop, and I pull us back down to 0 again, and then I slam it into first and say ready to go up to 100 again, and this time we'll tap out at 300, and then I'll try the same trick with the emergency stop. It is deeply unpleasant. It's shunting, as I call it. They are shunters of the economy. And they've caused such a shunt here that they closed all demand down. They killed the stock market properly down from those levels down to the green arrow down to the red. And then they overreacted. They caused an absolute pump. So those guys that, as I've mentioned many times before, the likes of Hunter that are calling for the pump, I'm saying, like, what about this major 6 trillion stock market pump don't you like, that you're still waiting for one? Then you've got the absolute kill back down on unemployment, because nobody can hire anybody now anymore because they're opening back up. They resized down. People found another way to earn a living, or living off the house of mom and dad or uncle and auntie or whatever the case may be, and you can't get them back into the unemployment market. You have that super low in unemployment, and now we're starting to move up. And how do you think it goes with energy prices? I don't know if you've seen some of my tweets on, well, retweets of other people on the data, if not mine, but on the data of German securing of gas into the winter months. You've gone 10x at wholesale level.
And they're now
It's
talking about
guaranteed.
rationing. Yeah.
The industrial engine of Europe will have business shutdowns on account of power. And people are going to freeze in their homes. They're going to do grid downs in a winter. I don't want to be in the northern hemisphere winter. Never mind what new bug they might release for justifications of locking everyone home and then telling them to wear jumpers and jackets at home while they can't put the heating on and you can't even run the lights. Europe isn't prepped for that. I'm sitting here in a country where every place has solar power, battery packs, who has money, and diesel engines, because they used to and are prepped for inconsistent power. So it's actually, sometimes a challenge is a gift, because it preps you early for a challenge that other people that are soft of belly are going to be gutted asunder. And trust me, I don't want to be in a northern hemisphere winter without heat.
Yeah,
I don't want to be told wear 3 layers of socks, your toes won't fall off, and put on your Moncler down jacket and go to sleep in that with your sleeping bag on inside your bed. I've done my military training. I've lived that out. I don't need to do that again, but I can tell you, lots of people are going to tell you. And then they're going to say to the guy who can afford the extortionately high electricity, who's a couple in a 3-4 bedroom home, they're going to say, well, your greed and your big home has killed grandma because the poor people that are 4 or 5 to the home couldn't afford to pay their home, and why you get to keep warm, and they'll divide and conquer the masses. Meanwhile, this is a central banking cartel, World Economic Forum initiated shortage.
Yep.
Because they started deglobalizing, this is something we haven't mentioned, at the same time as they were pursuing the inflationary policies. So not only are you getting the inverse Greenspan effect of globalization, but they're also reducing back that workshop, because you're saying, okay, we're not buying from Russia, we're not buying from, here and there. And suddenly now your options are being reduced and invariably cost rises. So they actually added fuel to the fire, which, given that we're talking about fuel and fire, how about Christine Lagarde, Agent Orange, as I call her, with her, we're tightening rates, do a 50 basis points, but they will also reserve the rights for quantitative easing on Italian bond markets.
So they basically, they're giving with one arm, or sorry, taking away with one arm and giving with another. They're saying basically, look, we will inflate as much as we need to keep that market afloat. And that was their mechanism.
Perversion. It's asset price manipulation. Something that should be worth 0, you're going to hold up because it's the end of the financial system if you let it re-rate down. And it's the end of your political euro experiment if you let it truly wind down. We're going to artificially maintain that. But hey, we want to look like we're dealing with inflation, cause 10% just about everywhere, although they probably put them just at 9 something, but they're all truly 15 to 20. And this energy cost, which is in everything that gets manufactured. Energy is an absolute rolling. It's a snowball down a hill. You can't stop it because it's in absolutely everything. It's in your packaging, oil, gas, everything of that nature. And of course, the Germans mothballed their 3 nuclear plants, which is the dumbest idea. So now essentially they're burning coal. So I was joking that anyone who has a Tesla should be made to charge his car with solar panels and wind. Otherwise, he's burning coal just like everybody else.
This is the whole thing. You're defeating the point, really, aren't you?
Yeah.
This is all fascinating stuff, but it's not a good outlook anywhere you look, it doesn't seem to be like, why would you invest in this kind of a market? You can trade it, the volatility is great to do so, but why invest? And this is the thing with crypto. One thing that you really impressed on me was that crypto, since its existence, has never had to deal with conditions anywhere near what we're seeing today. And it's, we've not, for example, let's take the cryptocurrency market. It rallied off yesterday's 75 basis point hike. Number of reasons for this. One, I think, is people are looking at CPI. They're looking at some of the commodity prices, which have come marginally down. And they're saying, okay, well, CPI might come down, so they're probably going to go a little bit easier, and we may not see another 75 basis point rate hike. So they're trying to price this in. But for me now, it's almost like the narrative is shifting from the inflation story, which is still a huge issue, to more of a deflationary attack almost, if you will, of the magnitude that we were talking about with the pandemic, but it has to be larger. And there is just a last little point here. One thing that does make me optimistic for the future of investing, if we get to go that far, is they also, if the magnitude of the event is larger, the magnitude of stimulus that they have to then pump into the economy has to match it. So lots of people say, okay, well, we're never going to get a $7 trillion package again. Well, I think if we do end up getting another package, it's going to be significantly larger than the one that we had previously, providing that the event matches. So there's a lot going on here to unpack.
Yeah, I mean, with regards to crypto and Bitcoin, just bringing it closer to home, the problem you face is, do you trade the reflation of the QE that is expected to come on a pivot before it's arrived? And my answer is no, because people don't realize you're actually being mauled simultaneously by two bears, but they're each having a go at you because they're both big and they get in the way a little bit. So you're being mauled by the inflation bear, which was the commodities and the pricing and everything costing more and spending less, which is also fed into the recession bear. So they are twins. The more the one gets to beat you up, the more he facilitates that the other one gets to beat you up. So he rests for a minute and then you get mauled by the other one. Because as the inflation comes and you're not got growth or investments that are outperforming that, you are having a wealth effect to the downside. And that is then driving the recession and the growth and conservative investment and behavior. So everything is down. It is basically, for me, the big short broadly. But in this period that the dollar rests, and it's all about recession, what you're actually getting is bad news is good news. You're back to this perversion of bad news is good news, on the basis that government fixes bad news. Now, in the old days, when central banks were not asset price managers and pain preventers, bad news was bad news and good news was good news. But what's actually happening now is bad news is good news for Bitcoin on account of fundamentals will return with a major, and as you've already indicated, as per my volatility increasing argument, the amount of damage they do each time is ever escalating, and thereby the reaction. The only problem I have with that is people think that we're just going to be perpetually in these pump and dump and recycle. And the point I'm saying is there is one point always, and you must never say this time is different, but eventually there is one point where it is different. And they want to bring the whole world to standstill. And I've just got to argue that that has to be the next time, because they've already just about brought the whole SME industry to standstill last time and locked down for 2 years. So the point is, this is the music stops and the introduction of the new system. Eventually, you get to the break, the tectonic plates snap, where they go, it's all fallen down, it's all broken, and this is so bad, and it's so extreme, we can't go back to printing. And I think the biggest print was the one that we've already had, and that this is going to be a major social unrest, lockdown, banks collapse. It's going to be just complete depression, full-scale depression and supply chain, so that essentially government is controlling all means of production, in essence, by the liquidity withdrawal through the banking system. They're already aggressively going through these oligarchical megacorps for the farmland, as you're probably aware. So we end up with a controlled supply chain that will be held back from us, and we'll be hung out to dry. And my comment and concern for many people in crypto is that they'll look at this green candle here and they'll say, back to bull.
Yeah.
And I'm saying there's a potential for an even deeper, harder dive that you've not seen the likes of, that crypto has not existed through in its lifetime yet. And that's where, you know, you line up the crypto. Those spikes are a little bit insane on the Bitfinex version. Let me get Bitstamp up. You have a bit more history on Stamp. But if you put this, and I find myself having a lot of the same discussions with many people, you put the NASDAQ on the bottom. Let me do that quickly. And you end up, let's just do the IXIC there, the comp on the NASDAQ. They've had much bigger high beta collapses than crypto's ever survived through. So here's 2012. Now, Bitcoin obviously started in 10, but there wasn't a lot going on. I think Stamp is the only really exchange.
You can use the Brave New Liquid Coin Index, which gives you a broader history, but it's only by a year or so. I think that's the longest one. Where
I don't think it's going to change much of what I'm going to say.
Yeah.
So yeah, people just understand that you know, Stamp is pretty much it. They were. Well, let me just, sorry, I'm still in jaw mode. Yeah, let me just get out of jaw mode. So if I put 2012 under 2012 and 22 under 22 there, it's just stretch that one a teeny bit. Crypto was coming into the selling off on what was a very minor pullback here and here on the NASDAQ. And you've had there 14 to 16, you know, you've had here 17. You had our pandemic event. But it's never seen even this. It's never seen 7, 8. Never mind the dot-com crash. It's never seen this scale. If you look at the percentage differential in those moves, it's, you know, if I measure it for you on the NASDAQ.
And this is what people need to, I think, come to terms with. You know, and there's lots of people out there that go, oh, well, they'll probably become uncorrelated or something like that. But the fact of the matter is, as of yet, they've been so in sync with sort of dollar net money flows that you can't bet on there being there not being a correlation here. If the NASDAQ is going to go into this kind of a period like 2008, 2000, that's a 79% contraction on the NASDAQ.com boom. These little sell-offs here where Bitcoin lost 80 or 90% was small beer, very small beer. So let's take this 14 high down to there. That was huge for it. If I just take 14, any of these sell-offs here, that's a 20%. That's not significant compared to 79%. And even the dot-com crash, that's a 56%. Yep.
You've not had anything of that scale on the NASDAQ. And that's my great concern. And people think, oh, but it's the NASDAQ, we're on chain, we'll suddenly be recognized as the solution. Actually, you won't, because the problem with all of these asset classes is its people are behind them. People buy Bitcoin and people buy tech stocks. And when people are battered, they don't buy them. Or when people are scared, they dump them. And you go, I'll never dump my Bitcoin, I'm a hodler through and through. If you have to choose between eating or paying your rent check and holding on to your Bitcoin, you're going to dump your Bitcoin and you're going to be forced to sell it at the lows. And you're going to hate yourself and you're going to have to do it, because otherwise you're going to look at your wife and say, baby doesn't need to eat. And, you know, be that guy then. Good luck. But you might not have a wife or a baby for very long. And that's how the game tends to go. So they haven't seen the scale, and this single green candle, that's very small. If you look at the bigger trend, this is all one macro bull market. People have to understand, since 2009, we reflated non-stop into 18, 19. Then we had the collapse of 20, and then we did a super additional inflate with 6 or 7 trillion. That's the period that Bitcoin was born into. Not into this period. Not into that period. It hasn't been tested in value, and it's not Bitcoin or on-chain that gets tested. It's the humans that hold it haven't been tested. You've been in Goldilocks period, and guess what? You're about to have the 2 bears beating the bejesus out of you period. And you don't feel so tough or so stroppy when you're getting hammered by the stagflation, hyper-stagflation, which is the bear of inflation and the bear of recession. And it'll be a depression, but they'll change the definition for that too.
Yeah,
I've no doubt.
Like they've done with a recession. No, it is. I mean, this is also relevant, you know, and you're absolutely spot on with what you're saying here about the fact that, you know, Bitcoin has never had to go through this, and that's the concern for me. And I think just some of the things we've mentioned, and we've only mentioned a few things, and there's many more things that we could probably throw in here to kind of really affirm what we're trying to say, that, look, markets are driven by people buying and selling. If somebody has the choice between paying their mortgage or getting rid of their crypto, talking about interest rate hikes, it's a no-brainer what people are going to do. And the thing is, at the moment, yes, there might be a bearish narrative and people are going, okay, everyone's too bearish. But often, talking about retail more than anyone, and I'm retail, you know, we're retail largely, they haven't had to make that choice yet. And often their positions won't reflect what they're saying. It's when people have to sell that's when, if you want to start calling bottoms and you look at all your other indicators, maybe that comes. But I think we've got a really tricky, at least 6 months ahead of us. And I think it's not just going to go down in a straight line. You're going to have these relief rallies like we're seeing at the moment. But a relief rally is, in my opinion, all it is.
Yes, should be treated as a relief rally in a bear market. You have to ask these few questions, and then you're welcome to differ from me. Everyone watching this. Are the crises getting smaller and the responses getting smaller? Are they staying the same, or are they expanding? If you come to the conclusion that they're expanding and we're going into a mega series of extreme volatility, which will be the introduction on-ramp for a new financial system, that is my opinion. On balance of probabilities. I don't know. I haven't been to the future and back yet, but I can see what people want. I can see what people holding the levers are doing. I can see the lies and the extremity of what they're telling. And this is how it appears to me. So that's number one. You've then got to ask tightening rates with more to come all the way up to a September guided pause. So even if they only did 0.25 and 0.25, August, we're in July, they do another 0.25. These other rates will still be kicking. They've only just done 75. That's had no effect on the economy yet. All the pain you're having is on the 1.75. Now you're 2.5. So ask yourself, is the pain going to go up as the new 3? Remember, we're talking about being bullish after 3 units of rate hike have just taken place into an already confirmed recession. Let me just repeat that for how insane this is. You're talking about being bullish. You're behaving as if the QE is already happening in an environment where you've just had 2 negative quarters and you've got more interest rate hikes to go of some level. And let me tell you, to say they would only do a quarter point between now and September would be a major pulling up of the brakes after they've just done 3 units in 75. So you've got to ask yourself, is this going to lead to more general pain, or should I be pumping, buying the pump and the rally off lows? And to me, I'm waiting for the more pain, because that's what's going to happen. Job cuts, supply shortages. I've never seen so much from a supply and demand dynamic that's going to keep prices stubbornly high. You reduce supply, you get less of the stuff at a certain price, and you have to pay more for a lot more. So supply curves are the opposite of demand curves. They go like that, where that's price and that's quantity. So if you want high quantity, you've got to bid high price. So they go like that. We're having reductions in supply. It brings the whole supply curve over across like that. Same price, you're getting less quantity. You need to pay even more, black market and above, to get the same level of supply in there. So you've never had such an awful set of circumstances, and everybody wants to buy the pivot and the QE before it's happened, because they're all just thinking pump and dump, grandpa, the Fed fixes this. But they don't think that there's an end game to this. They just think we're in a continuous cycle of pump and dumps based on monetary policy and quantitative easing. And I'm saying to you, it's the biggest one. Each one has got bigger. And the next demand killing event to curtail inflation is you all lose all your money in the banks, and most of you lose all your jobs. So imagine the world. That's how you surpass closing down the SME industry to just a few megacorps and locking people down in their homes and stopping them from travel. The demand destruction that did, how do you surpass that? Take all their money.
Big. It's going to be big.
Bankruptcies everywhere, be litigation, there'll be chaos, there'll be people. Look what's happening in China. People are thinking, yeah, but this won't happen here. They have normalization syndrome. The framing of what can go down is restricted by their personal life experience.
Yep.
These are people who've never lived through World War IIs, where cities like Paris were flattened and there were trenches in the mud in World War I, and people were dying like dogs and crawling through barbed wire. They have no frame of reference at all for this. So I suggest you read history to see that what I'm saying is indeed possible. And it's just not being priced in. There's no one pricing it in. Buy Bitcoin. Trust me, anyone holding any crypto of any value will have it. I'm still looking at, I sacrificed for Pulse and Pulse X. I'll take a reasonable multiple on the SAC value right now, and I'll get into cash and I'll tie it up in fixed things.
Yep.
And the safest place for me is physically held.
Yep. So you're talking about precious metals, actual cash.
Actual cash. Cash has been the best investment this year, actually. Dollars cash. Yeah, dollars were probably one of the best investments. So cash has been one of the best investments. Precious metals will certainly be. And I mentioned gold hit that key level that we always mention as a major level, and it was where it resisted just before COVID struck, the 1680 level. So I'll bring that back up and remind guys about that. As I say, we have very good and reliable people for vaulting, and you can also keep some on you. You should certainly keep some on you. Do not use government-based or banks or vaults that are on the government radars, or politically exposed people are holding it. This is the level you bumped into pre-COVID. Boom, you smashed down for COVID. You bumped into it again, you pull back again. I've got it in the weekly, so you don't see all of these details. Then you formed a nice little bull flag sitting on top of it, and you had your blow off. You've come down once, twice, 3 times, and that's a 4th resistance on the 1680. So it's encouraging for precious metals, but it could be a neckline if this is to be a double top. And if we have the really demand killing event that is possible, you would break this and sell off, because everybody will sell anything of any value. But I want to make sure I've got enough cash, which will still be accepted during the problem, reaction, solution, major dramas phase. I'm as self-reliant as possible. I'm well connected from a point of view of security, food, energy, and heat. And I don't want to be in a country that has hectic winters, because the whole concept of energy being guaranteed is going to come under question. And they are preparing you for that. And it wouldn't shock me even if Britain has load shedding days in the middle of winter.
Yeah, for sure. And like you say, you've got to look at all this and really go, do you want to be putting your money into markets, or would you rather put them to somewhere where it's safe and you know you've got it? And this is the thing. And talking about the capitulation event, you know, people have stopped talking about the yield curve all of a sudden. Yield curve looks ridiculous right now. It looks like
so many inversions. Everything's inverted.
And this is the thing. So your bias, I take it then, is that we see more downside across the board.
Yeah, I just brought up Elrond, which is one that we've been saying, you know, you may want to be short on.
Yep.
The alts are going to be softer, I think, are going to fall harder than Bitcoin as usual. This is it. I did this today, and I will show it to you. It hasn't changed. Weekly for Elrond, 510, bear flag, sell off. You're in a flag. You've just had a hammer. So you go up with the blue line with Bitcoin a little bit. You're going to get some rallies. I don't see this as anything but continuation. This area. It's an example of an alt that we've had a 23 to 27 target on for an extended period. Well, what will Bitcoin be doing? Could well see that 10K. I'm still not saying we won't see the 10K. We've said that chance could come, and possibly in that process you go to sub. And don't forget, I'm also saying in that environment, this could be a neckline for a double top on metals. This could rally up to here, come back down and crash with metals. But the paper price is meaningless. I wouldn't sell any gold at that price unless someone was holding a gun to my head. So you need to be sure that whatever gets thrown at you, you will not become a forced seller. And that's difficult when you work in a job or in a company, because your business is your income. The business you work for is income, and they get smashed. And there's bankruptcies all over the world. There's force majeure. There's counterparty risk. I'm even looking at my FX trades and saying, so what if I'm right and I don't get paid?
Yeah,
the broker goes down.
Yeah, absolutely.
Yeah, you know,
this is an issue. I think I can't remember what bank.
You could be wrong, you lose. You could be right and you could lose because you're too right on something that's too big.
Yep. For sure.
And these things don't exist anymore. And then you try to withdraw that money, you withdraw it into a bank that's now bankrupt. Actually, that's where Bitcoin's been useful, because I use Simple FX. It's in our YouTube. Yep. And I've actually got some Bitcoin, and I'm trading FX using Bitcoin as collateral, unlike everyone else is using fiat. But I've used a little bit of Bitcoin that I'm happy to hold, but I do think it can go down, but they don't adjust the collateral on Bitcoin going down. You make FX, it'll convert into Bitcoin, and then if they ever reflate back. But the one thing that worries me on Bitcoin that many people aren't thinking of, if Carstens, who ate all the pies, is introducing, and he's Bank of International Settlements, and he's going to, and every major central bank will be compliant or very similar to, with minor variations, introduce controlled central bank digital currencies. Why would they allow Bitcoin to continue to survive?
A question I've asked myself many, many times. A bit of me thinks they'd already have killed Bitcoin already. And is it, we spoke about it being the on-ramp to this new system. It's no coincidence that Bitcoin came around in 2008 at all. And no. One of the biggest threats is who on earth is Satoshi?
No, I've said many times. That's a fairy tale for adults. That's Satoshi. This is a NSA paper of 1996 in motion. They can crush anything. No one underwrote Bitcoin. There's no one to claim.
Yeah. Well,
against.
Do you not think that
Bitcoin goes to zero? Nobody. You chased a Ponzi scheme for which there's nobody around, they will say.
Yeah.
Government said, we warned you, this is dangerous, it's volatile. They'll all say it. We washed our hands, Pontius Pilate, boy. You crucified yourself on that one. We all said, governments all over the place, many records, don't go to crypto, yada, yada. I got into it because I felt it would go up and that there would be a thing in the beginning when it was starting, but I was always conscious of the fact that it could be the on-ramp for their next great game. They will never let you have your own money. So, if Bitcoin is better than their money, does Bitcoin survive? Have we ever had variety in money? You can buy a BMW, you can buy a Mercedes, you can buy whatever car you like. Do you have in Britain a choice to not use pounds, but to use Francis Hunts or HVF coins, or even, Tony Blair's for all we care? Yeah. There are no alternatives to pound currency, and the central bank owns a monopoly on money. You have no countries, unless you're talking about another monopoly like dollar. So if you're in Guinea-Bissau, they have their local and they have the dollar. That's okay. They're happy with that. That's two central banks. You don't have choice. You don't ever have choice on money. Everything else you can have choice. That's a point of slavery. Red shirt, green shirt, blue shirt, knock yourself out. But choice to be a slave or not. Central banking is slavery.
Yeah, no, absolutely. I read a report from Lloyd Bank, and it basically said that, look, 80% of their customers didn't have £400 in their bank account. Where does that leave you in any kind of a situation? To not have that. I mean, you have a big car bill. I've just had two of my cars serviced. It smashed that. How do people? And I'm a big believer that, and I honestly believe this, and it sounds sounding less and less mad that money is the very tool that they've used to keep people, where they are. It's the very thing that they've used to enslave people. It's a financial slavery that I think we're living in. But we're getting into all sorts here. So just some final thoughts from you, Francis, and then I'll let you go because I know you're very busy. Some final thoughts you wanted to share?
Things to watch. The one thing that I don't have high conviction on, by the way, just on oil, you've just had the dollar soften. The WTI is back at 98 and Brent's at 107. So you're averaging between the two of those above $100 again.
Can I ask you a quick question on oil? Because I'm not sure, I can't quite remember where I heard this from, but everyone's looking at the fact that oil prices come down. Were the US government not dumping oil recently?
They have been.
Yeah, so...
And they've agreed to dump a further 20 barrels on 180 million barrels, another 20 million. So they are actually running the inventory down, and that is bullish.
Yeah, because the thing is with that is that stops, and once that sell pressure has kind of come off, what do you think happens to the price of oil?
And they're running on leaner stores as well. Yeah. And God, that's not good for war footing or anything like that. And you know how they love a good war. So you've got stock markets a little bit up today and bouncy. And I think that shouldn't be trusted. I really do. I don't think that should be trusted. This is all yay, bull season. You could go all the way back to this neckline and then still get spanked through the 9-2. But you'll see it across the board. Stocks up. I was sketching a wedge there. We'll see how it turns out. Might be a flag. You could go all the way back to these necklines. This performed its head and shoulder. That doesn't mean the game is over. So you've got to ask yourself, how good and how quick are they going to turn? These markets are behaving like QE is already there. But you asked any parting shots. One thing that is a concern for the recession was this head and shoulder on the 10-year.
The yields, yep.
And I said when it came down here, this looks like a sell-off. So if, as I say, it's tag wrestling. You're kind of thrown into a WWF ring, and you've got the evil twins of bears, one called inflation and one called recession, that are taking turns to slap you up properly. And this is they've just tagged because the dollar's resting now. And you're now worrying more about the recession. This is a recession. If this goes to 2%, this is recession. How do you validate? What do you think the stock market's going to be doing if bonds are getting a bid up to 2%? Do you think the stock market's still going to be running up without QE? That's a fear trade. And that's percentage rates going down. That's a recession. So I don't think the stock market melts up. The only way you get bonds being bought up and yields dropping and the stock market going up is on QE. Yeah, for me.
It's people running for safety basically right now with the yields coming down. Yeah, I've been looking at that myself.
So this is going down. This is fear. This is risk off. Again, now it hasn't done anything dramatic. It's just touched the neckline and it's small pippy down. Watch if you have a nasty red candle there. Go look at your Bitcoin chart. Go look at your NASDAQ chart. Go look at your everything. So to be clear, I'm not down on crypto. I'm an active participant in crypto. I don't come here to hate on it. I'm just saying all these assets are a function of the people who own them. You think Bitcoin's solid and the blockchain's great. Doesn't matter if the people who own them sell them. You're talking about a human being that might be under pressure and will need money. And if yields are collapsing and bonds are being bid up, it's because of fear. Almost certainly. The only way, as I say, bonds go up in value and the stock market goes up in value is when they're doing a print. And they haven't agreed to print. They're still going to tighten again soon. So they've got to kill it first more until you're in real pain and you beg them to print. And we haven't reached that point yet. So if this performs down to here, the dollar will be softer. It will be. But it will be, it actually, I can't say that for sure. Because if you get foreign money coming into the US debt market, the dollar could actually get a bid. But generally, you would think if the rates go down, you're going to see that USD JPY continue to pull back, macro trade. that went a massive long way. So you're going to see, generally, you would expect that. But if there's a rush of money into America, don't forget, if the Americans go into recession, it's kind of like they used to say Wall Street sneezed and the rest of the world caught a cold. If American consumer goes into recession, Germany, Japan, Korea, you don't sell Samsung TVs if the American goes to sleep. And the BMW dealer is not going to be buying a Samsung TV either, because the same American is also not buying his car. So his bonuses, his commission is also down. So everybody's down. So again, if American consumer properly gets given the sneeze, the rest of the world will catch cold, and that could see money go US way. So you could actually get a dollar bid at the same time as this turns down. Although normally, as I say, you would associate it with the difference in interest rates. So when America's rates are going up more aggressively. But if we go into full fear, go look at the great financial crisis, dollar bid. I mean, it's easiest almost to see on the Korean one. So because that's an Asian one, but it's in all of them.
I mean, even though I'm in the UK, I'm in dollars. That's where I hold all my
yeah, a multi-currency account is very smart for guys not in America.
For sure. Certainly, I mean, the great British pound hasn't been as bad as the euro, but it's took a huge hit. I mean, I have bills that come out in America, and I've noticed a jump in them, and that's just simply based on the currency getting weaker. So I'm in terms of cash, largely stable coins and dollars, and I actually think stable coins really do propel the overreach of the dollar. What we're seeing with lots of countries out there that have high inflation is they're actually choosing to buy stable coins. So why do you think BlackRock are involved in it?
The biggest and the most liquid are all dollar based. Yeah, Absolutely. It's a very good comment. I agree with you. You look at this, all the major crises. What happens? USD Korean won. Asian crisis very specifically hurt Korea, but it hurt the whole world. Major spike. 2008, major spike. You know, Shanghai Accord to the tail end, when oil collapsed. 2014, it was in the hundreds, collapsed to 25. You can see these various events, and now we're breaking out. These are all quite clear that the dollar is the safe haven currency. And right now, when they're under threat, they're going to encourage that even more. They're always going to want to beat their chest and, you know, come out all alpha when new things were being released. They did it to the euro. The euro fell from 160 to 80 cents when it was launched, when it became official to show who was boss. And with the BRICS narrative, which we haven't discussed, but people know what's going on there, and the Russia-China creation of alternative systems, they too have will be met. The way they will counter the demand for the new system is to drive strength in the dollar.
Yep.
So that's why I continue to assess that we're going to push the pain further than people think. And even if that's why I think saying just one more quarter point is very unlikely. You'll get even more than that, even though you're in a recession. Why? The one thing we didn't discuss, why would they lie and recategorize recession? Because they want to avoid doing stimulatory behavior now. Why do you lie about what is a recession? You want to be able to denounce that what's currently happening is not a recession. Make claims that your pizza delivery boy market is super hot and you've got plenty of slots for guys to ride bicycles with hot pieces of bread. And at the same time, keep turning the screws beyond which you would normally. Why would you do that? Officially, to restrain a very high inflation rate. Undercurrent, unstated objective, drive back the dollar strength in time. So we're having a pause now, but drive it again. Why? Because you export the inflation problem to everybody else then. Because the oil comes down when the dollar's strong, so Americans pay less. But everyone else currency weakens relative to the dollar, and they still end up paying more. You make it everybody else's problem as the world currency of the world. And that makes any new system launched, Russia, China, BRICS, etc., their currency then relatively flounder, and it asserts everyone wanting dollars because people are momentum chasers.
Of course, yeah.
I refer back to my pump and dump central banking comments. Everyone chases the pump. That's why retail gets skinned. They're getting in the last third and riding the big crash down. So people in the same way are going to want dollars. You and I are both proud to be saying that we hold dollars, not rands, pounds, euros, and yen.
Well,
And
it's bizarre for a crypto channel to be saying that. I mean, I've often sort of looked at myself in the mirror and gone, am I really saying that I'm actually holding stablecoin dollars right now? Because, this is crypto and I do believe that Satoshi's vision, the principles of sound money that's different, we talk about sound money, you got your Austrians that really believed in gold and stuff like that. I do think moving the kind of ideas there of moving away from a government shouldn't control money. It's that simple. Yeah. This is why we're in such a mess that we're in. I do believe
actually,
in
it's
that
not
ideology.
Government. It's a private banking cartel
From the
that actually owns your government and gives you a selection of people to choose from that are all pre-approved by them, in essence. So it's the money printers. This takes you back to the Rothschild statement. I care not who makes the laws, as long as I provide the issuance of money. It's the ultimate power.
Yeah.
And that always stands higher and above rotational elected government.
Yep.
Nobody of real power wants to be voted out and submits to that situation. They sit in the shadows. They exert real power. They're unnamed. They don't want their kids kidnapped for ransom. And they are part of the deep, dark, permanent government structure, and it's banking. And so the irony is actually the dollar is a good investment right now. You're not betraying the concept of crypto because crypto is actually under threat, and they will want to support their new money system that they will be introducing, and they don't want something that puts it in a poor light out there. That's my thinking.
Yep. No.
So how do you kill Bitcoin? Well, you could do it by sweep a pen and call it illegal, or you could just regulate it out. You just make it a tedious thing to use. And you have to fill in forms when you bought, how much you made, tax. Oh, you've done a transaction. Have you done this? And you just make it an absolute ball ache to actually use. So you just stick a bureaucracy on it. Or and those people who go dark get chased and harassed. Their devices are reporting them, listening in on them, surveillance, finance, XYZ, and you get all sorts of harassment from some government agency wherever you happen to be a citizen. So I mean, there's many ways you can kill a cat, slowly, fast, or whatever. Yeah. Maybe it survives, but then I just think, well, I don't think I'll ever own a CBDC. Everyone will just convert all their CBDCs into Bitcoin.
Yep. I mean, there's a few things that make me think maybe it sticks around. I mean, I do think it will stick around. The way I see crypto is more of a new asset class.
Yeah.
And one thing that I pay a lot of attention to is who's getting involved in it. You see all of your big institutions, whether it be BlackRock, the largest asset manager in the world, whether it be JP Morgan, whether it even be Barclays, rather ironically, that have actually been stopping people from transacting and buying crypto. They just bought a crypto firm or a large stake in it. So there is a part of me that goes, okay, well, I think this is going to be treated as an asset class. I do believe that blockchain in many ways is revolutionary in the sense that lots of people go, okay, well, what's behind it? So there's nothing intrinsically necessarily, tangible behind it. But if you look at Amazon, $1 trillion company, what are they providing? They're providing a service. Well, what is Ethereum doing in regards to smart contracts? Very similar. And this is something that I think
Ethereum
about.
has got a more, in some ways, a higher probability of actual survival.
I think because if you look at
I think Bitcoin is as a problem in that it's too much digital gold, and that's a problem against CBDCs. Well, Ethereum is going to be the enabler of them registering your properties on the blockchain and then making you give it a valuation and then buying you out if they deem you to have undervalued it. All these other cuckoo schemes of communism to get you off the land. And Ethereum is going to be that enabler.
Yep. I think the scope for smart contract blockchains, if you look at the evolution of blockchain, you had Bitcoin, which is kind of like your first computer. And then you had Ethereum, which just came along and they chose to keep proof of work, but are now moving to proof of stake, whereas you've got other blockchains. I know you were certainly looking at Solana during the bull run. You've got things like Cardano, all of these other ones. I can see a use for them because smart contracts are useful. Certainly if you control the blockchain that the smart contracts are based on. So I do think crypto, the problem 100%. Is if everything goes down I don't really think it matters too much what asset you're in, unless it's tangible. So one thing that I buy, I always think about this, and just to bounce this idea off you, one thing that I always buy, I'm not a big drinker myself, although I do like a drink every now and then, but I always buy bottles of whiskey because I always think if the shit hit the fan, that would be a pretty darn good tradable asset. You know, it's somebody who's on their,
the prison yards, it was cigarettes
absolutely.
and all sorts of things. The practical equivalent today is gold, because I'll take gold for my services all day long.
Yep.
I might even give a discount. If someone could deliver to a certain place at a certain time, a certain amount, I'll take it in gold rather than have it go through the fiat system. I'm probably going to be converting it to that, and you're short stepping me and saving me a couple of links, and there's less paper work as well.
And
so I would argue, that's really, really interesting. The gold is that final purpose. But as I say, just being cautious about Bitcoin's future doesn't mean I'm saying it gets cancelled. It just means I don't think people price that in enough, even if it's a 10% or a 15% possibility. Ethereum, I think, is serving the control structure's purposes far more, and is a technology. And I would see it surviving and being an integral part of our existence on crypto. And I think some of the others. And so the whole technology, it's not canceling this whole space and saying crypto is all just a bad dream. It's all Tamagotchi and the fashion's past. I don't mean that at all. The technological elements, and it's no doubt that this is an open source banking system where everything can be tracked and traced. This is a centralization dream sold to you as decentralization.
And we know they want to keep it open source. I mean, look at how they've been treating Monero. They don't want secret coins or coins that...
Privacy.
Yeah, they don't want privacy at all. And this is why I actually think blockchain is going to play a role. Because then, I mean, think about, who ate all the pies? He said himself, he goes, look, we are going to be able to tell see exactly what you're buying, and go one step further than that and stop you from buying it if we don't think you should be. This is why I think blockchain actually does, it is very much, I think, a tech revolution, in the sense that it's brought new technology to the world that we're probably all going to use in some form, maybe we...
But it's given weapons and power to centralized states in the name of decentralizing you.
Yep, absolutely.
This is the great lie. Who's going to have the power? Who's going to be able to? They'll have bots, AI, that'll be checking you, sending you SMSs that you've just made a payment using crypto for a cup of coffee. Was that income that you had earned? Or were you paying back a loan, or prove it? Do you have paperwork, or what's your, all sorts of things. And this is not freedom. It's not freedom. The one thing I know is crypto is not the libertarian dream and the freedom. And I've known that. I was suspicious of it from the very beginning. And I've been addressed early. We all love the story, but I didn't buy the fairy tale on Satoshi. I know about the NSA doc of 1996. So the notion is this advances their complete control over your money to the point where they can directly manage you with SMS and auto bot messages demanding information, otherwise that's frozen or whatever, without needing commercial banking system anymore.
Yep,
the commercial banking
from the source. Yep.
Well, certainly the retail. When I talk about the retail banking for you and I, you can go straight to CBDC with CBDC wallets, and they can run you from there. And you won't even speak to a person. You'll have some bot making demands of you every time you make a payment. Prove this, prove that. What about that? Was it you? We've got your bio metrics from your thumb saying you made that purchase then, and you were here. Where did the income come from? X, Y, Z. So, and you're using their devices. Samsung, all of them, that the same company that makes TVs that listen in on you. I'm sorry, your liberty and your privacy is absolutely gone. I don't know if they captured Monero when they grabbed hold of Fluffy Pony, or whether they're still pretending that they're trying to. The problem I have is if they have captured it and you run to it, you put a big fat red flag on your head.
Yep, and the problem you've
got, your government that you fall under will be notified.
What wallet do you keep it in? This is the thing, because where they'll get you is they'll get you, if they don't like a cryptocurrency, they can go after the cryptocurrency and probably won't have that much success. But where they can get you is the on-ramps and off-ramps. And this is why all exchanges are now very much under, very close watch. I mean, it's fact, one thing I always say to people, as much as there is And the important thing is not to get bogged down with everything. You know,
I
human
quite
beings
like
are
the Monero
survivors.
chart, by the way, that I pulled up just on that.
As a big
It
sort
looks
of
a better
flag.
chart generally. Yeah, it
Yeah.
does look a better chart. And I was watching it overperform Bitcoin too.
Monero Bitcoin. Fascinating.
Yeah.
Are there any cryptos you like except for Monero, just out of curiosity? Secret Network is one that I think you might find
Fundamentally,
interesting.
privacy is a very libertarian principle.
Yeah. Secret
So
Network
were
might
it to be
a good one for you.
proven that it's still non-captured, I would say Monero would have to be my favorite. It's been around since year dot.
Yep.
And it started overperforming Bitcoin, you know, tapped out here at about not even 3%, 0.3% of a Bitcoin, and now you're at you double that. So it's actually not done too bad. Squeezing higher, but it's getting into a bit of sticky area. I wouldn't chase in relative to Bitcoin right now, but it's one I would love to see win if we can believe that it's still not entirely captured. There's a dual risk by engaging with it. If it is captured, you put a massive red flag. So by that point, you want to be reset ready. You want to be like us. You want to have a Panamanian corporation. You do it in a corporation name with a foundation, and you've left your country of passport and origin. Then who chases you?
Yep.
It's only once they admit that there's a one world government, then you'll have a one world that government chase you. If you take your example, if you no longer live in Britain, you just have a British passport, you have a business and a foundation that owns that business, and it goes to Panama, and that entity receives a payment for your services that you've delivered to so-and-so doing whatever, and that goes into Monero. Well, who gets contacted? Not the British government.
They can't
because you don't live there anymore. You don't spend more than 90 days there. You visit your dad and your family for 85 days, and you stay out of Dodge, and you stay in the sunshine where you won't freeze when the power's down. And then you push a Monero backwards and forwards all you like, and they can put a red flag on you, because officially only your government, your tax extractor, can chase you. But once they admit that we've got some form of global, and they are globalizing a lot of things, you know, you just have to look at the World Health Organization, the WEF. These are people no one's voted over. Nobody's voted for, that is making transnational decisions and guidelines that governments are being coerced or cooperating with. So you already really do have a world order. But on the tax extraction side, the official narrative is you fall under Her Majesty's Revenue Service, HMRC, and you know, once you've left there, you don't. And that's why I encourage people, get reset ready. You know, your place of your birth is random. Go where you treated best. Don't fund the extractors, and have a chance to use Monero, whether it's captured or not, because you can, and there's no one to notify, you know.
Yeah, absolutely. Well, finally, Francis, I'd love it if you could tell people where they can find you. Of course, we're going to leave links in the description. Just tell people exactly where they can find you for anybody that's interested. This has been a fascinating chat. It's always fascinating talking to you, and a massive thank you again for coming on. I'm really enjoying these. I know my community is, and hopefully it's something that we can continue. So if you could maybe tell people where they can find you, and of course we'll leave all the links to Francis's stuff, website, Twitter pages, socials, etc. in the description.
Pleasure. So don't be bummed out by anything you hear me say. By highlighting the full extent of the challenge is actually to brace yourself for your cold shower and be prepared for it, and to recognize the benefits it gives you, because we're all getting economically macro level a cold shower, and actually it's very healthy for you. But the people who aren't prepared are in shock, pain, and fetal position. We specialize in building wealth in reset season, and this is reset season, and that is our primary goal, using the HVF method on trading. And you can contact any of our through the Market Sniper. We book a call. We ask to speak to everybody once, just to make sure you're of sane, good mind. We have refused people, but generally we don't. Most people are. You will talk to someone who was exactly like you, who will show you the community, all its resources, and all that you get. And you can ask him if it was good for him or her. And we only use our members for staff. We're not salesy. You're not put under any pressure. And if you recognize the stress and the pressures that could possibly be coming, I only have to be 5% possibly right. You should have some level of planning for that. And that's what we aim to do for you, both at a reset level, at the crypto level. You might not have got a big crypto feeling out of me. It's because my concern is bearishness, but we've been very aggressively in crypto. We've been very aggressively long, short. We've been hodlers. And you'll get everything you need there, and then trading the other markets like the FX markets, which are the new crypto markets in some senses. All that from themarketsniper.com. My main Twitter handle is @themarketsniper, and it's also the YouTube channel as well as @thecryptosniper. Thank you very much for having me on, and to your lovely audience. And yeah, keep your spirits up. Taking action is mental health always.
Absolute pleasure. Thank you very much, Francis. We'll see you soon.